Hello everyone. In this video, we'll dive more deeply into the topic of overhead allocation and introduce the benefits of activity-based costing system and ABC management, especially for manufacturing industries. As we have learned from chapter 1, there are three components of manufacture cost: direct material, direct labor, and the indirect manufacture overhead. Over the past 70 years, we can clearly see the trend. The direct labor cost has almost decreased by 50% over the 70 years period. In the same time, the manufacture overhead almost doubled in the same period. And the direct material cost relative stable, even we observe a slightly reduced portion. And the underlying reason we all know is because of the widely adoption of automated manufacture process, including the use of machineries, equipment, robots. As a result, we have more indirect labor and also depreciation and maintenance expenses related to the machineries and equipment. So because of this cost shift, now you can clearly see how the company allocate, like the approach they allocate the overhead directly affect the accuracy and relevance of the cost reports, as we learned from chapter 3, the job order costing system. Because in the job order costing system or even in process costing system, the direct labor and direct materials, we use the actual cost incurred. We can trace them to the usage of the direct material and the labor hours. But the overhead cost is a systematic allocation depending on the way you chose the cost drivers and the approach chosen by the business. So in that case, let's review the different options to allocate the manufacture overhead among the products or services. Initially, when the manufacture process is relatively simple, so we call the traditional manufacture industries. So the production process in the whole company is more homogeneous. In that case, a plant-wide or company-wide predetermined overhead rate will be enough to give you reasonable, accurate information about the cost reports. So the whole company will use the same overhead allocation approach. So you choose one cost driver depending on the mostly will be the direct labor hours, direct labor cost, or the machinery hours. So that's a plant-wide. That's also we started introduce the job order costing system in chapter 3. With evolvement and the production become more diversified, the overhead allocation also become more complex than a plant-wide overhead rate because each department or process or the work centers, they have different operational features. Some of the departments are more labor intensive, or some of the process is more like a machinery incentive. So in that case, we allow the managerial accounting system having flexibilities. Each department, the main department of operation, can choose your own overhead. I may choose the direct labor hour, or the other departments can choose the machine hours, or other departments can choose their own. So one company can have multiple departmental predetermined overhead rate. So the workload in this case will increase compared to the plant-wide, but the accuracy and the relevance of the cost data will be much improved than the plant-wide. So that's kind of the second stage of the overhead allocation approach. And now with more diversified and the emphasis on the value chain analysis of the manufacturer or business activities, we evolve into a new system we call activity-based costing. So this costing system is not a costing parallel to job order costing or process costing. ABC is especially for manufacturer overhead allocation, or you can say indirect cost allocation for service industries. So the main idea for the ABC, I'm using the diagram from our ebook. I think this is a very clear picture you can see. This is so different from the plant-wide or departmental-wide. We don't really have the functional areas defined in the allocation hierarchy or the system. In the ABC costing system, we separate the cost accumulation and allocation into two stages. In the first stage, you'll have a full analysis about the value chain activities for your entire business related to the starting of the product design until completion of the production ready to be sold to customers. So you analyze all of the activities in the system and develop different cost pools. Group the similar type of cost into one pool means they are driven by the similar cost drivers. So not every type of activity has a single cost driver because it's impossible or to use that many, okay, like maybe as 40, 50 different type of activities. So we analyze all of the possible activities, but group them into a reasonable number of cost pools under under SAP system. They will call cost centers. So cost pools or cost centers. So under each cost pool, we'll identify one unique cost driver for this many type of cost. For example, the machinery-related cost, maintenance or the depreciation or some other machinery-related expenses. The most relevant cost driver may be the operational hours of the machine or equipment, right? So operating hours. And then you may have another cost pool is set up the facilities. Set up time, the cost driver might be the times, right? How many times every 1,000 units or every 2,000 units we need to have one setup of the operational facilities. So the time may be a cost driver for the setup related cost. And purchasing may be driven by the number of the purchase orders, by the logistics. Material handling by also maybe by the purchase order numbers or maybe by other cost drivers. So on and so forth, you will summarize the cost related to your business activities into a reasonable, controllable number of cost pools, and then pick a cost driver, the most relevant cost driver for each of them. So we are not using a single plant-wide, or you are not really using a departmental overhead, because under one department, the cost features may be different. Okay, there may be several cost pools in each department. So the ABC, the cost pools is more accurate than the departmental overhead. And then after we identify all of the cost pools and the cost drivers, then you can calculate a allocation rate for each of the cost pools in the system. And here we have 8, right? So 8 different cost pools. As a result, 8 different overhead rates. And this will significantly increase the workload and the data, data processing time in the system. But if you have a zone already have the system built up, and with all of the technologies, this will significantly increase the cost relevancy, the accuracy, relevance, and also the usefulness of your cost data for decision making. So it's worthwhile. The ABC costing, if you're checking on the behavior side, is almost receive resistance. So you have resistance from the management, from the employees, because this is really a overturn or renovation of your whole business process. It's not something you just patch a hole, right? So in your closing is really a kind of top down or like a overturn of the old system and adoption of a brand new system. But mostly the work and the time is worthwhile to do because that's really give you a brand new costing system and also timely, accurate, relevant information for decision makings. Okay, so that's a brief idea for the ABC costing, like the two-stage allocations. And now when you started a ABC costing system, so they develop a four different type of cost pools. You can use it as a framework, right? So or like borrow this idea to apply to your organization to see how you can identify the most appropriate cost pools and the related cost drivers. And the idea is if you look for your business operations, okay, especially for manufacturer, when we're looking for the four different levels of cost pools, one cost pool is related to the unit level, means this cost pool, the increase and decrease, the change of the cost are driven by the single units, like units level, like the product units or the machine hours or maybe the direct labor hours. So by the units, like most of the, down to the basic measurements of the production. So machinery hours related to the machinery expense, direct labor hours, and units produced, okay, like the consumption supply used in the production, so unit levels. Then the bench levels means for each bench, we may process a certain number of the units or machinery hours, like the purchase order processed related to the purchasing cost, number of the setups related to the equipment setup cost, handling the materials, right? The pounds of the material handled. So bench level, so it's like a more aggregated level of the cost pool than the unit level. Then continue to move up. We have product level, okay, related to the different brands or product lines you have. For example, testing the new products, right? So this for the whole group of the new products, a new model of your electronic course, a new flavor of the drink, all like the number of the part type, right? So the parts inventories, all the inventory like the design time. And then finally, we have the facility level type of cost pools related to your general factory administration, like the supervisor's salaries, the factory level management team, or that their admin, their payrolls, and their other general expenses. Property tax we paid to the whole facility of the manufacturer or insurance, or plant building depreciations or maintenance. Okay, that's the facility level. So be careful when talking about these cost pools. They are still manufacturer cost. We are not looking for supporting expenses. For supporting expenses, your sales, general, and admin expenses, they are deducted in the full amount in the income statement, right? So there is no allocation to the products or services. So all of the allocation we are talking about here is your manufacturer overhead. We separate them into different cost pools depending on the features. And now here is a summary if you're looking for the definition and a brief narrative of the ABC costing system. And during the ABC is normally combined with your analysis of the value added and the non-value added activities. So until the company can do this ABC and value chain analysis together. So by doing this, not only we can identify the cost drivers, lots of the times the managers may find we already take for granted some of the cost. We think they are recurring, so you put it in your annual budgets, monthly budgets. But after detailed analysis, you actually found them, that they are not necessary, or you can reduce the cost. Like some of the procedures or process is really not needed. They might be overlapping with other activities or completely redundant. And I read multiple reports about this value analysis, help the company optimize their manufacture or service process and reduce the cost incurred for making the products or provide the service. And why we want to make a large investment of resources and time on adopting the ABC system? Probably you already read the example from the book. Under the traditional costing system, if you use a plant-wide or departmental-wide overhead, we don't really differentiate the manufacturer specialization of the products or services. So we treat them the same, right? So you use the direct labor hours or machinery hours, but you didn't really capture the detailed needs for some of like the complex products or the simple products. So the allocation of overhead wouldn't capture the actual needs of the complex products. So in that case, you more can end up underestimate the overhead incurred for the low volume, okay, on this side. For the low volume but complex products, and require specific process, normally the high end of your products. So high end of products or specialized service to your clients. So the volume is not that much, but they require specialization or more complex production procedures. So in that case, if you use the same overhead rate as your common products or services, it will underestimate or undercalculate the overhead allocate to this high-end type of products. So undercosting or hidden loss. You may charge a lower price than you should, right, for this type of products. So you may think, oh, my products is very popular because I have price advantage, but you didn't realize you are undercharging because you are under calculating the cost to make the products. On the other side, for your common products, simple, through your generic production process with high volume, and you are also allocating using the same overhead rate because they have large volume, large volume, they will capture more overhead than they should. So you are shifting some of the overhead you should give to the high-end products to your general products. So make their cost overestimated. And then you can overcharge your common products and they lose competitive advantage in the market. So overcharging your common products and undercharging your high-end products, so cause the screwness of your whole costing system. So the profitability analysis and the whole strategy may be misled, okay, by the costing system. So that's really the significance of the traditional costing system. If you continue to apply to the current production, your cost data will lose relevance. As an example, so I'm just picking up this. If you're looking for the aircraft making, right? So we know they all have different models, commercial airplanes. They have the more like the high cost items and general, like more generic type of productions. So probably low volume, high volume, and middle volume. So think about if you are using a constant plant-wide, right? So all departmental overhead. The result is you more underestimate, right? Because the largest airplanes, they need more low volume, right? But